Assalamualaikum and hi. A very good day to our beloved lecturer, Dr. Muhammad Raime bin Ramlan. So we are from Group 1. We present about the risk management of WCE Holdings BERHAD. So below is the name and a number matrix of my group mates. So here is the presentation overview. First is the introduction and second is risk management framework. Next is the significant risk to the organization and technique and analyzing the risk factor. Next is the risk metric and the second last is the way to improve effectiveness of risk management practice and lastly is conclusion. So I will pass to the next presenter.
Assalamualaikum warahmatullahi wabarakatuh. I bid to Dr. Raime bin Ramlan. My name is Yazid Mustami bin Zainal. My metric number is 261118. Okay, I will start the presentation with the introduction of the company. WCE Holdings Berhad, originally known as Kumpulan Europlus Berhad, is a Malaysian investing firm. Manufacturing, tool concession, construction and others are some of the company's division. Product development, production and distribution are all a part of the manufacturing division's responsibilities, while construction, management and tolling of highways are all part of its toll concession business. This segment is involved in the construction contracting business. Its other segment is involved in the construction, leasing, management and investment industries. The company's subsidiary, West Coast Expressway Sdn Bhd, is working to complete the West Coast Expressway WCE project. From Banting in Selangor to Taiping in Perak, approximately 230 kilometers of highway will be built as a part of the WCE project. Bandar Rimbayu and 1,879-acre mixed development project located next to Kota Kemuning Shah Alam has also been a success for the group. Development began in March 2013 and is expected to take about 20 years to complete at an estimated gross development value of 11,500 million ringgit Malaysia. Moving forward, the group is confident that its investment in infrastructure and property investment will put it on a long-term growth trajectory. Next, the internal environment of the company that concern the suitability of risk management implementation. The first internal environment in this company is the board of directors. Second one is the internal auditors, and the last one is the management of the company. Okay, next, I will proceed with the risk management framework of WCE Holdings Berhad. The risk management framework in this company is through the use of the risk management system, or as known as RMS. RMS is a system that the board of directors and other stakeholders can rest assured that the risks faced by the organization will be adequately and effectively managed, and that the investments of shareholders as well as the assets of the organization will be safe. The effectiveness of the group's RMS is periodically assessed and improved by management and the board. The chairman of the risk management committee is the CEO of the group, and RMC members are the senior executive. Risk management committee, RMC, ensures that the group has an ongoing process for identifying, evaluating, analyzing, monitoring and controlling key business risks that may affect the group business objective, and that the group's corporate targets are met within acceptable risk appetite for the year under review, as well as up to the date of approval of this statement. All significant risks, including non-compliance with legal requirements, rules, standards and guidelines, are addressed in the evaluation. The board is assured that procedures put in place are operating adequately and effectively. New areas of risk management are introduced as the business risk profile changes. Strategic, financial and operational risks are all addressed in the risk profile, which is a comprehensive overview of the company's well-being. In the risk profile, all the risks that have been discovered and assessed are listed, as well as their likelihood of occurring and their impact on the group. It also outlines the methods in place to monitor and mitigate those risks. Risks that are likely or practically certain to occur and have a significant or catastrophic impact, which also known as principal risks, are evaluated specifically to ensure that the procedures in place to monitor and manage the risks are adequate and effective. And finally, they are reported to the audit committee. That's all from me. Thank you.
Good day to Dr. Raime. My name is Melvin Chong with metric number 263407. So in this part, we will analyze the 10 significant risks to the organization WCE Holdings Berhad. So the first one is construction risk, the company facing from non-performing contractor or consultant. So there will be additional costs incurred by the company for replacement and compensation. And the company may also face the legal claims or legal action from customer. So company can accept some of the risk and attempting to mitigate the risk by 3 ways. The first one is a detailed tender policies and procedure for contract evaluation and awards. Second, contractor and consultant performance will be evaluated every 6 months. Third, meeting and briefing and discussion between the WCE project teams and the contractor or consultants participating on a regular basis. Next, second, the political risk is come from the financial viability of the project. So the government has made a decision to impose an 18% reduction on the toll fees from the North-South Expressway could have a negative impact on the traffic volume. The cost of the project may also increase as companies are required to maintain it on a regular basis. So the company must plan to address the impact, changing policy, government policy, and accepting the risk with, establish a positive working relationship with all the industry players, including the government agencies, local governments, and sustained businesses. Besides that, active conversation to resolve the differences in the toll rate to find a more long-term solution to such policy changes. Okay, so to address the impact of such policy changes, the company will continue to interact with all the stakeholders as well. So the third one is a COVID-19 pandemic risk. So the Malaysia government issued a National Movement Control Order, MCO, which took effect on the March 18, 2020. Construction effort on the unfinished section will temporarily stop, and traffic level on the open section decreased significantly. So the project cost may also increase as the enterprise forced to postpone the project completion and open area continue to operate with a low client demand. So the company can manage the risk by accepting some of the risk and try to mitigate it through construction work resumed with stringent COVID SOP and protocol to be followed. And second, the core business of toll operation and maintenance will classified as essential service, and employee continue to work throughout the MCO period. And third, ensure all the frontliner staff will equipped with a mask, gloves, and sanitizer. Fourth, credit risk. WCE is primarily exposed to the credit risk due to its trade receivable and contract asset. The risk has a direct influence on the cash flow interruption and increasing the collection costs. It is possible that the corporation will have a poor debts. So the company accepting some of the risk and attempting to mitigate it, the risk by credit policies and credit risk exposure are managed by credit approval, credit limit, and monitoring procedure. Besides that, a customer creditworthiness is determined using an elaborate credit rating scorecard and individual credit limitation. If a debtor is more than 30 days late on a contractual payment, there is a significant risk in credit risk. The fifth is a liquidity risk. So liquidity risk is primarily as a result of WCE Holdings BERHAD, numerous payable loans and borrowing. So if a company liquidity is insufficient, it may seek fundraising or sell assets from the company. So both of these will increase the company expenses and the company reputation will be also harmed. So manage the risk by accepting some of the risk and try to mitigate it through maintain a level of cash and cash equivalent. Besides that, maintain a bank facilities deemed equitable. So the next 5 significant risks will be presented by Yini.
Good evening, Doctor. My name is Yong Yimin, matrix number 263438. So now I'm going to continue with another 5 of the significant risks. First is the interest rate risk. Interest rate risk is the fluctuation in market interest rates. The exposure to the interest rate risk is from borrowing loans such as bond. The interest rate increases, the price of the bond will decrease. The company will need to sell the bond at a cheaper price. The risk appetite of the company for interest rate risk is medium risk appetite. They will accept the risk and hedging action is not taken by the company because they think that the hedging cost is more expensive than the interest rate fluctuations. Next is the market risk. Market risk is the risk of being left behind by the industry and will lead to the loss of market share and hence will lose their competitive advantages in the market. The company seems to have a medium risk appetite and the company is optimistic about the future development announced by the Malaysian government. They accept the market risk by increase the source of income and secure new contracts with potential returns. This is a medium risk with major impact. Next is the operational risk. This is the risk of uncertainties of day-to-day business activities in the company, like safety issue of the employees. WCE major business activities is construction, and 80% of their working environment is very dangerous. Hence, the safety issue is a major concern. They have a high risk appetite on this. They might want to avoid the risk by introducing the mindset of safety first among the employees and monitor the working environment consistently. This is an extreme risk and have a critical impact. Next is the compliance or regulatory risk. Corruption or illegal practices in the company will damage the reputation of the company. For the risk, they have a higher risk appetite because WCE need to handle sudden changes of regulatory. They will mitigate this risk by carrying out quality assurance to supervise the regulatory developments and also cooperate with the government authorities so that they will be alert of the regulatory changes. This is a high risk and have a critical impact. Lastly is the management information system risk. With the company store important data in the system, then they are facing risk to lose the data to the outsiders, especially the competitors. This will damage their sustainability in the market. This is a high risk appetite for the management information system risk because they are growing their system and the exposure of cybersecurity risk increase. They will mitigate the risk by managing interest security and develop infrastructure security protection solutions and systems. This is a medium risk with major impact. So this is all from me. Thank you.
Assalamualaikum and salam sejahtera. I'm Rizlawati Biditanga with metric number 26240. So I will explain the technique and analyzing risk factor. Undeniable that technique and analyzing risk factor are very crucial for any organization regardless of its activity, sector and size. Therefore, there are many techniques that can be used by WCE Holdings BERHAD to identify risk factor such as scenario analysis, SWOT analysis and root cause analysis. So let's take a look one by one. Firstly is scenario analysis. Scenario analysis is a tool for identifying and mitigating risks that did not exist previously. In scenario analysis, various scenarios are created. That means it takes into account that the risk may not have yet occurred but have the possibility to occur in the future. Secondly, SWOT analysis. SWOT stands for strengths, weaknesses, opportunities, and threat. It is a framework through which an organization assesses the potential internal and external influence that may have a positive or negative impact on a project. Therefore, it is highly useful for identifying risk factors within the context of the larger organization. Lastly, root cause analysis. Root cause analysis is a systematic process for determining the root cause of problems or risks as well as a method for dealing with them. The organization can use diagram techniques such as fishbone diagram, influence diagram and process flowchart to find the root cause of the problems that can reduce the risk. Next, risk matrix. This is top 10 significant risks that we identified in WCE Holdings BERHAD. Based on the risk matrix here, there are 4 categories which indicate different actions are required to be taken. Referring to the risk matrix here, construction risk, political risk, COVID-19 pandemic risk, operational risk, and compliance or regulatory risk are the most significant risks to WCE Holdings BERHAD, where these risks are classified as extreme risks to the company. If these risks occur, it will bring a huge impact to the group as it may cause financial crisis to the country or even worldwide. On the other hand, credit risk, liquidity risk, interest rate risk, and management information system risk are considered as moderate risk because these risks can be avoided if the group always maintain their performance and cash flow.
Assalamualaikum and hi, my name is Ahmad Izzat Marhoki Idrus. My metric number is 261097. So I will continue with this part, which is way to improve the effectiveness of risk management practice. So the effective risk management is important to attaining the company's goals and objectives. So there were several ways to improving the effectiveness of the WCE Holdings BERHAD risk management practice. So we move to the next slide. The first way is create a good risk culture. So WCE Holdings BERHAD should create a good risk culture by ensuring that all parties are responsible for how they behave in all circumstances. So it can be achieved with a strong risk-aware culture in the WCE organization and with the strong leadership in the organization related to risk management. The top management must actively foster a risk-aware culture by ensuring their commitment to a risk-aware culture is clear. So furthermore, it may be implemented with the engagement and participation of all stakeholders in the risk management process at all phases. Second way is improve good communication. WCE Holdings BERHAD should communicate effectively with all levels of stakeholders. In terms of internal communication, the company should encourage the cross-departmental communication to ensure that the cooperation is feasible to improve the risk management practice effectiveness. So the next is the organization should allow the risk information exchange from the bottom to the top management. It is because the bottom management will be the one who must deal with the risk initially, and high management should be able to obtain detail from the bottom management. The third way is provide integrated reporting and keep monitoring. So WCE must provide a single integrated report that will allow top management to acquire a better knowledge of the true situation from a variety of integrated reports. Its purpose is to develop a shared understanding of the extent to which WCE objectives may be met in the previous and the upcoming period. Next is proactive and consistent monitoring is required to ensure that the company is constantly prepared to deal with the incoming risk appropriately. So the next part is conclusion. To be conclude, the risk management is important because it provides a method for managing risk and identifying risk in a company. Risk management describes an organization's decision about how they will deal with the various risks or whether they will face it. And finally, without a risk management in an organization, a company cannot establish its long-term goals. If a company specifies its objective without considering the risk, it is likely that it will lose a focus whenever any of these risks become a reality. That's all from our group. Thank you for lending me your ears. Take care and stay safe.